I made a video about this before, but I'm going to reiterate how simple it is to actually do trades with this strategy. I've dubbed it the scholar strategy, and as the namesake goes, it is something that I've created myself. It requires three indicators. The first one is the Fibonacci EMA ribbon. So if we jump into the settings, you'll see that in the style, all of these numbers are readily available. So I clicked 5, 13, 55, 233, 610, 987. All right, whatever colors you want to assign, that's up to you. This is just my personal preference. Next one, RBIPP. This is the Rob Booker intraday pivot points. Okay, to find it, search the indicators, just put Rob Booker, and it's right there. I have it favorited already, and it's on. Okay, so what we want to do is go to settings, style. I only do the 8-hour pivots, that's all I need. And the input for that is going to be 987, period 3. Okay, all right. I'll just jump in there again. Period 1 and period 2, this is if you want to do more of a scalping strategy, and I'll show you what that's going to look like, right? So you can see way more little dashes across the screen, right? Different colors. So the purpose of them is to take it on the 5-minute and the 15-minute time frame. And it's the same basic idea as the black lines that we do, but the black lines are what I'm going to dive into right now. The little lines right here, it's going to be for another explanation down the line. I just want to be very clear about a very basic strategy that's requires 5 minutes of your time every day. Honestly, it's insane. And if you guys want to see the wins, I mean, I posted them on my thumbnail. I took, what was it? I think it was 35 trades in the span of 1 month using that strategy. And I mean, the numbers speak for themselves, okay? So what we do is the first thing, go on the 1-hour time frame. All right, and identify where the trend is heading. Now that's the purpose of those EMA lines. All right, these are just some previous wins that I've had, and I'll explain that later on. Very, very straightforward. You look to see where the 3 smallest EMAs are going which direction, and if that lines up with the 3 larger EMAs. So the larger EMAs, I have the gold, the white, and the black. Right? So if we see the white crossing the black and everything else starting to point down, it's a very good sign that we're going to be taking sells. If, for example, you see like this and all the lines are pointing up, this is where we're going to be taking buys. So on Euro USD right now, I'm going to go something random. I'm going to go CAD CHF. I'll just switch to the weekly. Okay. Pick a random point in time right here, and switch it back down to, I don't think the hourly is going to work back in 2004. Let's try that again. It might seem like a great idea, but I don't think it'll go back that far. So all this chop, let's just pop it right there on the replay. There we go. And we'll switch that to the 1 hour. Okay, so here we go. This is what we see in that time frame. All right, now yes, this would have been very nice to take, but regardless of what that looks like in the past, let's just press play and see where it's going to go for just a little bit. Okay, to see if we have any switch in momentum. So here we go. All right, good example right here. This is where it's crossing. It's very similar to the chart that you just saw. And the MACD I only put on here. I like to use it as a frame of reference to spot divergence, right? Just in case it looks like it's overbought or oversold, and it's much easier to tell when you have the MACD with the price action and the histogram. So what do we do? Okay, what do we do with this strategy? Number one, you identify which direction these EMAs are heading, right? So as you can see right now, the EMAs are still pointing up, relatively speaking, right? All this way. The only time these little guys start to switch is right here. Okay, now that's starting to go down. So because of that, I'm gonna wait one or two pivot lines to see if that's the actual direction it wants to continue going. Okay, so now this pivot line came. You can see it's right in between them, which kind of tells me that it's still above the black line. Until it breaks through the black line down, I'm not going to be taking any trades on this just yet. All right, so now this switched momentum overall on the 1 hour, I'm going to be taking sells. So every time the candles are going to be crossing this black line, and let me just set this is going to be 15 or 15 pips, so 150 ticks, and 450. All right. Oh, that went backwards. Let me try that again. 450 and 150. There we go. That's what I wanted. So every trade you take, you risk 15 pips to gain 45 pips. So every time you take a trade, the ratio is 3 to 1. All right, and you take the trade off these pivot lines after you determine which direction these EMAs are heading. Okay, so now we've determined that it's going to be going down. All right, we didn't take a trade off this guy, but as you can see, that would have been a stop loss, right? Because it triggered. So one particular set of rules that I put for myself on this one, I only take a trade on this pivot line the first 8 hours of it appearing. So, for example, if the pivot line appears at 8 a.m., by 4 p.m., I'm out of the trade if it hasn't triggered yet. Okay? So, for example, right here, if it was 1500 hours, so that's 3 p.m. my time, 8 bars, right? If it didn't trigger by 11 p.m. my time, as you can see, it didn't right here, I'm out of the trade. Okay? I close it down. I don't have anything open because as you see, if I would have taken this, it would have stopped me out, even though it looks like it dropped right after. Okay, 15 pips is the limit for this, and unfortunately, it would have went up to 16 pips and broken you out. So let's move forward until the next pivot line. Okay, here we go. So here is the next one. This is the trade that I would take. And now we just bring it forward slightly. There we go. It triggered stop loss. So let's move on to the next pivot line. Same idea right here. It went right off that line. So when the trade is 15 pips in profit, I move the stop loss to break even. So that, I can tell you right now, is 15. If you want to be certain of that, there you go. 18, 19, 24 pips, right? So as soon as it goes to 15, stop loss is at break even. So this is a risk-free trade. And there you go. It hit the break even. So now this trade is still on a sell, and I'll be taking it right on that pivot line. So far that would have been a break even because it went all the way down here and back up. So next we take a trade here because you can see the next pivot line formed. Profit. Okay, so we lost one, we broke even on two, profit. So that means that you lost one. Break-evens don't really count, and then a 3 to 1 risk to reward, right? So that means you won one trade, you risked whatever the percentage is, right? You risked 15 pips and you won 45. So because you lost 15 here, you're still up 30 pips, right? Or whatever the risk tolerance that you had. So if you do $1 a pip, let's say you risked $15, you won 45, you lost 15 over here, you're still up 30. Next pivot line, right here. Take a sell off the pivot. Let's see where it goes. Okay, hit the stop loss. So now you're still up you're still up 15 bucks basically. Now look at this giant candle. That would have sucked, right? So the only way to tell where that would have been, oh, that's too far back in time. Let's switch it back to the 1 hour. I think I just messed up the entire, let's see where we were at. Oh boy, I gotta scroll all the way back until I see. Oh jeez, what did I do to myself? Here, let me see the 4 hour for a second. It'll be marked with. Did I just lose my spot? I think I did. All right, well, whatever the case is. All right, whatever. It doesn't matter. Let's pop right here then, just somewhere random, okay? just to show you how this works. So, you see a little bit of chop. Everything's been slightly going down, but it raised recently, and it looks like it's consolidating, but it finally started breaking down, right? So everything passed through the big EMAs on the downward shift. So same idea. Let's take this and set the stop level 150 and the profit 450. Whoops, that's too much. 450. All right, so there we have it. That is our risk tolerance. So here's another idea, right? As an example, right here, you would have taken that trade. It would have been pretty choppy to begin with, right? The only unfortunate thing is if you see right here where it dropped 15 pips, that would have been a break even and went right back up. So unfortunately, that would have knocked you out of your trade, right? Same thing with this one. Sometimes it's a real bummer where you have giant wicks, because this would have entered your trade. It would have, you would have triggered your break even, and then right up it goes. So then you take another sell right here. All right. Profit. Right. Very easy. I mean, it sucked that it was 2 break evens in a row, but there's your profit. This is what I'm talking about by mitigating your risk. So next pivot comes up. It's right here. Let's see where it goes. Did it trigger? It did not. Did it trigger off this one? Yes, this one is an entry. Oh, there we go. I think it depends on how that candle went, right? So let's switch it to the 30-minute. And we can see right here, right? So it popped up first and then it dropped down, never went back up. So that was never into break even, as you can see where the candles are. So it dropped down, it hit, just touched profit and went up here. So now that's two wins, correct? Let's move on with the next pivot line. Okay, so that would be a break even. Next trade. That would be a break even. Next trade. So far, it's in break even. Profit. Next trade. Didn't trigger. Next trade. So you see, this is one thing I'd be cautious of on the 30-minute. As soon as it pops like this, I would just take a sell stop rather than a sell limit. So taking the sell stop, let's see when it actually goes back down to trigger. You see, that's one reason I take the sell stop, because that would have knocked you right out. So luckily, it's not in the trade yet. Next pivot line comes up. Again, wait for that sell stop to happen, because as you see, it would have popped right up right at the beginning. So the thing is, one thing to be cautious of, right at 3 o'clock, that's when markets technically open, what I want to say, in Japan, Australia, and then Europe, and then here in North America. So what ends up happening right at open for about the first hour, the spread through brokers is insane. It could be up to 20 pips, right? Depending on the currency pair that you pick. So I wouldn't even advise to trade in that first half an hour until it kind of stabilizes a little bit. So 4 o'clock is ideally where I'd like to be taking my entries, right? Right at 3 o'clock, it's choppy. The thing is, in the morning, it really doesn't make a difference. But in the afternoon, when markets are closing and opening up again, broker spreads are nuts. All right, so this I would have taken a sell stop, and as you can see, it didn't trigger. Let's keep going. I just want to make sure it's back on that 1 hour time frame, because that's the EMAs that we're using, not in the 30-minute. As you can see how they're spreading here, that's beautiful. That's exactly what we want. So here, I would be taking a sell stop. And if 8 hours have passed already, I would have been out of the trade, right? So unfortunately, it triggered 10 hours in. Sometimes that happens. If that's the risk you want to play, that's completely up to you, right? But as you can see, if you would have played that risk, that's a 3-to-1 gain. Just make sure whatever rules you set for yourself, you follow them. If you're going to keep the pivot line open the entire time, probably not a great idea, right? However, if you keep it open until the next pivot shows up, and then cancel those trades on the first pivot. Like for example here, I would have the sell stop until that pivot appeared. Then I would cancel this one and then set it up here. Okay, now we keep moving. Oh look, another sell right there. And currently where it's at, that's going to be at a break even. And look, another pivot line appeared. I got to shrink that down a little bit, but you see what I'm saying. Another pivot line appeared right underneath the entry that we took. So that would technically be 2 entries. So what happened here, this one is still in profit, break even. Sorry, this trade right here, the first one is sitting at break even, and this one depends if it went down 15 pips. It went down 10, so no, that one is still at an appropriate stop loss. And look at that. First one, TP, I mean, it's a pip away, right? We'll see if it actually triggers. But unfortunately, it did not. So both trades, the second one here is at break even. The first one, I mean, that sucks, but it can happen once in a while. Like how much we were off, 2 pips. It's okay, right? So yeah, I mean, if you let it keep going, it's going to break even. Candle patterns at that point would probably be wise, right? So again, right here, it's another situation where if you take the trade, it's kind of overextended, right? I would be cautious of taking it that low, especially when you got a lot of weird movements, I guess, slowly going down, but wicks keep pulling it back up. So I'd be hesitant to take that one, but you know what? We've won 3 or 4 already, so what's a loss? Okay, so this would be a sell stop because it already went up, and again, I would be out of that already because it passed my 8-hour rule. Okay, next one, that trade I would be in and stop loss. Next trade right here, profit. And that one didn't even trigger. But this one, very nice. And again, little bit past that 8-hour rule that I had. It's about 9 or 10 hours in. It triggered overnight and down it went, right? So it's another profit. Let's see, again, is that within the time frame? See, it's again 1 o'clock overnight because that's when the CHF, the Swiss franc, kind of goes online, the Swiss banks, right? That's why you have a lot of movement there. And one way or another, we're at break even on this trade, and then we'll see this guy right here. There you go. So that one definitely hit TP. This one hit TP. This one came very close to entry. You know, didn't really trigger, but now you see what I'm talking about. Boom. That's why we set it to break even, right? Even though that would have hit TP. And now you also know why I go 45, right? I could probably risk a little bit more if it has a nice momentum and the EMAs aren't shifting, right? But what's the point of being greedy every time? There's a couple trades where I took that are like 120 pips, which were very nice risk to rewards. But the situation with that becomes that if you see EMA kind of jumbling around like this, it's probably a good idea to exit. Okay, and the trades that usually go about 100 or 150 during a volatile time when the pivot line triggered, that was most of the time it's luck. Sometimes that there's a skill involved, but I gotta say, if you want to let it run and you see it going 50, 60, 70 pips in profit, and it's been like 10 minutes, bring your stop loss up. Right? When it's about 70 pips in profit, your stop loss should be at the 45 pip TP that you already set. So now you make your 3-to-1 regardless of where that goes. So it can keep going. It could become a 12-to-1, right? But it doesn't matter. You locked in your wins and you can just let the rest ride. All right? So let's see how we would gauge a momentum shift. Because right now, after that big pull-up, I'd be very nervous taking sells. Okay? Now let's see what ends up happening. Because right now all the little EMAs are starting to come together, and I don't really like how that happens, right? So they are converging onto one line almost. So let's see what happens with that. Right? And as you can see, this is why I don't like taking trades when everything's on top of each other. It is very messy. It's really nice when everything's spread out and moving with the trade. So, you know, you could take a week or 2 of straight wins and then a week of just no trades because of this choppiness. Right? You could risk it, but there's going to be losses and break evens. So wait for them to split up. Okay, now just watch it happen. Is there a split? So right here, okay, when you see them splitting up right there, that's where I would take a sell right off that candle. And look, TP, easy win. Next one, right? Here's the line. Unfortunately, that would stop you out. But let's see, like I said, the 8 hours, right? Unfortunately, the chop is there. However, it went into profit before it popped up. So you're in a break even on that trade. Next, right here, stop loss. And it'll happen sometimes. Stopped. And because this one looks like it's already shifting, I wouldn't even bother taking that trade. If I get stopped out twice in a row, the third one, very likely it might shift direction as well. But let's say, for example, I took that trade, then I negated one of my wins back here and I lost 3. It's okay. Okay, so look, now we're having a shift in momentum. It looks like it's starting to go upwards. Okay, where are the large EMAs overall? They're still pointing down, the 2 big ones, the white one's starting to come up. Right, and here's one way to tell too. This, right, peak, smaller peak. Smaller peak, larger peak. That's divergence to the buy side, right? So very likely it might be switching up. So I would just wait to confirm that when it crosses the other EMAs. But right now it's looking like it wants to shift upwards. Right? And right now it's not doing anything but consolidating. There we go. That's a little bit of more of a move. And there we go. It finally crossed this EMA. It's doing a little bit of a pullback. So now I'm switching my direction to buys. All right. So profit level 450, stop level 150. Okay. So let's see how we do. We'll get rid of that guy. Play. Stopped out. Unfortunately, that would have been stopped out as well. Okay, so you can see this is what it can happen as well. Fooled a little bit, right? And it's starting to go back down. But overall, the little guys are consolidating. The big ones are still showing that they're going down. So this becomes kind of chopped to trade in, and you have to really take your pick as to which one you want to commit to. Okay, so right now I said I'm going to be going to the buys. I'm going to wait for everything to shift up. Okay, so here we go. Now we're back to this range right here. Now it all depends if we break through it. Don't worry about where that's sitting at right now. So not quite yet, not quite yet. There we go. So now I'm taking buys. Here we go, right off this candle. Okay. Profit. This candle, that would have been a loss. This one, probably a non-entry. Yeah, see, that it's unfortunate if it is, because that just wicked you out, and then that would have been almost in profit. This one, it would have been very choppy, unfortunately. Right, but as you can see, the EMAs are consolidating, but they're slowly shifting upwards. So, you know, taking trades while this is all happening, like for instance, that's a buy, that's a stop loss. If you took a buy off that, you're technically at a break even. You took a buy off here, you're technically in a break even. That one is almost there. So that got stopped out. And yeah, just becomes choppy when everything's on top of each other, right? Not a great spot to trade in. Wait until it starts breaking out. Okay, but like I said, even if you are impatient and don't want to wait, look what would happen here. Okay, trade, it eventually went into profit. This trade eventually went into profit. I mean, that probably would have been a break even anyway because it wicked up and went back down. This trade, it went 15 pips up and then back down, but all the way up in profit. This one would have been a break even, right? So even when it's consolidating kind of choppy like this, it's still possible to grab wins. You're not going to be getting as many as when the when the trend is incredibly obvious as before, but kind of proves the point, right? Like it's still going to be still overall good to practice your dedication, I guess. Practice your ability to follow the set rules that you laid out for yourself. Okay. So like I said, I'm bullish, right? Because everything's starting to shift up. So, you know, would I have taken that trade right here on a buy? Maybe. I mean, that would have sucked, right? But it kind of happens occasionally. You just have to bear with it, right? They're not all going to be wins, but the idea is because the win ratios are 3-1, you can actually lose 3 times before you're worried about breaking even, not making anything. Look how close this one came to entry, right? Very close, but not quite there, even though it would have hit TP. So you see, even if you take a buy on here, that didn't trigger. Take a buy on that pivot, didn't even trigger. Buy on that pivot, didn't even trigger. All right, so that's a nice thing. Buy on this pivot, that one did trigger. Let's see where it goes. Break even for sure. Let's see if it was 15 pips. It was 13, so nope. That wasn't set up to break even, so it would have been risky, but it's definitely at break even now. Same with this next trade. That would be at break even, at about there. So both of them would have hit break even. Next pivot line. So you see the fact that everything started to go down, and you know, you've seen this trend right here, and then 2 break evens on the buy. I'd be switching to a sell right now. Right, so profit 450, ticks 150. Okay, down here we go, and here we are. Profit. Next one, does it trigger? Kind of. I mean, it did go all the way up, but like I said, right, this is why I make the 8-hour rule. Did it surpass 8 hours? See, there's the 8 hours. If it didn't trigger, I would have closed the trade. It went in 10 hours, and then you lost it. So, again, I showed you before that if you, depends on the currency pair, if you waited for those 10, 11 hours for the trade to trigger, could be in profit, could hit your stop loss. One way or another, I mean, you're taking the risk, right? If you want to mitigate your risk, play it safe. Once the 8 hours go by, delete your trade. If you're in the trade, let it play out. And if you want to take the risk, take the risk. You know, that's completely up to you. I'm not the one to stop you. I'm just trying to give you the guidelines here. All right, so now that one, beautiful. You see, love that pivot. Now it's definitely break even. Look at that profit. Oh, so this is what I'm talking about. When it starts to drop and you're awake for it, right? Because I mean, 3 a.m. I'm not really paying attention to this anymore. So that would have definitely been a set up for that. But check this out. Imagine you were paying attention to that. So far, that's a 10-1 trade. Okay. This guy right here, that would have been broken out. But again, it all really depends if you were in that long one or not, right? And even still, like I'll bring this back up to normal. Okay, watch this. Oh, did we get profit? Look at this. Come on. I have a feeling with broker spreads that probably would have triggered. How close was it? Ridiculous. I mean, that's a 1/10 of a pip. Anyway, so another example, right? Like this one, unfortunately, if you would have taken the trade very close, you know, sometimes it works in your favor. That would have been a break even. This one, unfortunately, would have been a loss. Okay, now here we go. Again, this one, unfortunately, just at a loss. You see, very, very small. This trade, I don't even think it'll trigger. Let's see. No. This one, that would have been almost a loss. Let's see if it actually keeps going up. Yep, that's done. Right, so I mean, we got 2 wins out of that and 3 losses. Overall, you're still up 2-1. So anyway, I'm not going to keep diving into that strategy. I just wanted to show you how it works, what to set up for it. I did make this video in the trading masterclass to show how it works, how to back test it. And again, as you see, pick a currency pair, go to a random point in time, as far back as the 1 hour will allow you. I would think 4 years is kind of the cusp of what you're able to do. Hit the replay, and then as it's going up like that, take your buys and sells as the pivots come up, and you'll see exactly how they go. This is how to backtest it. Gain your confidence with the currency pair that you like. To be honest, CAD CHF sucks. It is not a great currency pair to trade. You see that I have it up here just because it was trending for a little bit, but I haven't highlighted it. The ones I'm focused on are Euro USD and Euro CAD. They seem to be less volatile, a little bit more consistent, right? And just to show you where it's at right now when the pivot lines pop up, right? So, I mean, it's starting to come up, but this is all structural. Overall, it was going down for quite a long time. Now it's starting to pop up. So this would have been a buy, right? How much would I be in profit right now? Well, I'd be at break even, but it went up to 25. So anyway, that's how the strategy works, guys. Again, how much do you really need? You need to pick one currency pair. I don't recommend going more than one when you're doing your testing and when you're doing your trading. Start off with a demo account, get a feel for this, try it out for 30 days minimum. Okay, I would recommend 90. Do it for a full 90 days. Follow the strategy. Make sure that you really dedicate yourself. Log it, right? Get yourself a padded paper and log every trade that you took, because then you'll be able to see if you were consistent in following the rules or if you screwed up a couple and took those willy-nilly trades. Okay? So, traders, good luck.